I think I said it looks as if it's trying to accumulate, which it looks as if it has been during the last 4 or 5 trading days. Now on the screen, remember we're looking at scalping opportunities, right? If you want to trade your pensions and all that, I'm afraid you're going to have to talk to Philip Friston more, because he's a fund manager and that's what he specializes in. But we have up on the screen a 7-minute, Peter, a 7-minute chart of the S&P 500 future.
Quick question, Gamish. What's the point of having 7-minute charts, says Tina?
Well, what's the point of having any minute chart? What do you want, a 5-minute, 10-minute, 3-minute, 5-minute? You name it, we can give it you. And you can read all these charts. Just because I've got a 7-minute up doesn't mean to say that that's the ultimate thing. You need to check your favorite time frames, because the nature of these moves, don't forget you're dealing with a computer that's just following sets of instructions on what you've instructed the programmer to put into it. And sometimes it doesn't meet the criteria, not on some of the time frames. But the information is still there. It's either strong or weak. Right? Does that help? Sure, perhaps not. Anyway, Peter's looking at the screen. If you've got any questions. But this is a 7-minute chart. Now we look over here. Of course, I know this is in hindsight, but happened live. Right, what's I say, Pete? Right, so the computer has detected supply. Now, supply means the professional money must be selling. That's the word supply. As the market's gone up, they've unloaded, and that accounts for that very high volume there. And that's why I always say to you, markets do not like very high volume on these up bars, especially after you've had an up move. Right? So there you are. There's one there as well. What's that, Pete? Supply, yeah, but there's another one there. Right, so they're both the same signal flow. So it's supply. Right? Now, you know I've said to you many times in the past, hundreds of times, if the market's still bullish, they'll probably test after a red arrow. Minus 2 red arrows supplied. Normally the red arrow would be what we call no demand. Right? So we look at the next bar, and it is in fact a red down bar. Right? So is that a test? Well, no, it's not a test. A test is a down bar on a narrow spread, usually closing middle or high on low volume. So we'll just have a look and see what the computer tells us. In fact, it is. So we look down the bottom here. Right, so we've got a down bar. Ooh, volume's ultra high. So there's certainly no low volume, look. The spread is wide, certainly not a narrow spread. It's even closed in the low, so certainly you have to close the middle or high, so that is not a test. That's a continuation of the weakness. Right, and then the downtrend kicks in. Look, the red bars. The red bars are caused because professional money know perfectly well at this stage this market's weak because of this here. They've unloaded. There's 2 bars there unloaded, so they don't support the market, and that's why you get these red down bars. This is a simple trending system to the downside. However, they will reach a point, right, where professional money will say, right, okay, I think the prices are now low enough for me or us to start thinking we can make some profit out of this. And that's what happens. There'd be some stopping volume here, a reversal. Look, we've got a signal of some sort. Stopping volume, right, computer agrees with us, right, but you know that this is only the start of a phase. The market can't sort of suddenly do this and then suddenly go up to heaven. It has to build what we call a cause. Excuse me. And then a cause means it's got to whipsaw sideways, right, varying degrees of intensity. And during that time, they're buying. And they note they will not go up until the supply has disappeared, if any. So up it goes, fair enough. Look, if you look at different time frames, there'd be no demand on these these blue up bars. Right. Now there's a no demand bar. So actually we look at the next bar, look. After that red arrow. And what the computer tells us we've got here. Bar is down, yeah, we can see that. Oh, volume's low now. Oh, yeah. Spread's average, yeah, well. Don't forget, these tests, like bars, have lots of relatives. And they close it low. But the main thing is that the volume is low, look. Right? That means there's no selling pressure in the market at that moment. And we can see that we've got this strength in the background here. We've got the high volume. It's arched over a little bit, look. Right. It's not really a classic test, I must agree with you. But it is a red down bar with no selling pressure. A sharp reversal, blue up bar, that's really a gotcha bar. They don't want you riding this winners. So the idea of a huge widespread up when they know definitely there's strength there, it tends to put traders off. Because people don't like buying at a higher price today that they could have bought on the previous bar at a lower price. It's just the way human beings are. Not all of them, but a lot of them. And that's why they do it. So it's a widespread up tends to put people off. And they say, oh, I missed that. That's what they want. They want you to miss it. Now there is a red arrow, but there's no testing going on. And up we go. This here looks decidedly dodgy or weak, doesn't it? Looks like an up thrust. But the market looks strong. Right. What's that? You put 20. Oh, yeah. No, it looks dodgy, doesn't it? That type of bar does not look all that good. At the end, we've seen this many, many times. I think we even mentioned this last session. We had people call it an up thrust, but it's not a true up thrust. It's just simply supply. Swamping a bit of demand there. The volume is high, but not terribly high. You know. Before that goes up, if it was going to go up, you'd expect a test of some sort. If it shoots up now or no demand or some more high volume, you expect lower prices. But the market has to, it's an ongoing story. It's like reading a book, you know, you've got to read the next page, and you sit there and you do nothing until you personally, as a trader, identifies the principle. You don't guess or hope or pray or anything like that, right? You definitely want to see the principle. At the moment, we've just got strength in the background, but that one last bar there, visibly, does not look strong here. Now, there's no signal on it, is there? No. But that doesn't mean to say it's not signal on other time frames. Now, please, Peter's looking at the screen. Any questions? Peter, read it.
Thanks, Tom. So there's a question here from Seb. What would Tom consider the strongest VSA signal?
What would I consider the strongest signal? A test in a rising market. In other words, you see a down bar. Right, we've talked about this many, many times over recent weeks or months. You've got strength in the background, the market's going up, suddenly you see a red down bar, narrow spread, close in the middle or high, volume is low. The computer tells you at the bottom what it is. So we don't hold any secrets. And if anybody out there tells you they've got a secret nobody else knows, be fully aware that you're probably being conned for a con. So be careful. We don't hold any secrets back. We tell you exactly what produces these signals, how and why.
Thank you, Tom. And Steve's also asking a question here. Why isn't it called a two-bar reversal? So I think when you were talking about this area here, Tom, you noted the down bar immediately followed by the what Gavin calls the gotcha bar, if you like. Could that be called a two-bar reversal?
Well, yes, you're right. It certainly could be called a two-bar reversal. The trouble with these signs of strength, well, not trouble, but they have lots of relatives. They don't all come in looking the same. And the reason is, of course, human beings, professionals, are trading these things. And but basic principle, you should be able to see, and you can see, not should be able to, you can see. It's a basic principle. You don't nail yourself down to some rule that says, oh, I didn't say bottom reversal, so I ignored it. You have to learn to recognize these principles as they appear. And then once you do that, once you've mastered that, then you're well on your way, because your ability as a trader just has to take over then. And that may be a bit of a hurdle for some people, believe it or not, but there you are.
Okay, folks, let's see what other questions are coming here. Now, there's a question here from Kevin. Is the previous second to last down bar considered a test? You know, Tom, you just mentioned this bar here looked a bit suspect. Now, after that, there was a test-like bar. Now, how would you look at that? Is it a test, first of all, and what does it mean in the context of where it is?
Well, we've certainly got red down bar, and it, matter of fact, it's quite a good observation, because it could very well be a test, testing that supply on that bar. So we've got the cursor on it. So we've got a down bar, yes. Hey? Has it moved? Sorry, it's updating live. That it? Yeah, so it looks like a test, doesn't it? Certainly looks like a test. As a matter of fact, that's a good observation. Good on you. Down bar, volume low, spread narrow, close. That is a test. That is a test. Now, the thing is that if, right, this is a weak bar, professional would have seen that, and it looks as if they tested it here, and there is little or no supply present. Right, now, the market should basically respond up on that. Now, the thing is, if what you expect to happen doesn't happen, then surely that's telling you some information as well. And when you come to think about it, you would expect higher prices, but mind, this is an unpleasant looking bar here. This one. Especially when you look at that high volume. It's unpleasant looking. There's definitely weakness there. None of that. Look how it closed in the middle. There's definitely supply there. Now, okay, they have a test. Not a lot's happening. Not a lot of pressure on that market. Although it hasn't responded as we'd like to see by shooting up. If this was going to be bullish, right, you would expect to see possibly another test. But that's quite right, there is a test. But don't forget, if you see a principle appear, like that test there, that is a test. Don't forget this is an unpleasant looking bar on the, before it though. It's very unpleasant looking. Look at that terrific high volume, that's supply. And look how it closed in the middle, look. That's supply. They tested, not a lot of supply here, look. But they're a bit nervous now. Yeah, this would be, yeah, no demand probably. You're quite right though. Now, we just have to let the story unfold. They're telling us a story. It's like reading Braille. This is a language they're talking to you.
Yeah, so if it was me looking at that test, I must admit personally I would look at that previous bar, as Tom has pointed out, the one with a high volume, and I would say to myself, this is through experience as well, bitter experience actually sometimes, I'd say, well, I'm not going long after that. I mean, it might go up, but the point is, because that's there, it's a sign of weakness, and relatively speaking, because of the volume, it's a serious sign of weakness in a sense, for the time being, not overall. So that's why I wouldn't go long. And if I'm wrong, I'm wrong. I'd rather do that than go in the market and then regret it later on. It's happened too many times. So there you are. So what other questions have we got here? Rita's just turned up, everyone. So this is from Winston. You told us that a gap up with narrow spread on high, ultra high volume is a serious sign of weakness. What signs should we look for on a down gap that should show us sign of strength or even sign of weakness? So on the down direction.
Well, you're quite right. If you ever see an up bar, right, and it gaps up and the spread is narrow, right, and the volume is very high, you can bet your bottom dollar that's what we call the end of a rising market. And it's a pretty, well, it is telling you loud and clear, watch out boys, girls, this is a very, very weak market now. Professionals have unloaded a tremendous amount of their holdings here. If they're not interested in the upside, the market's not going anywhere. Now, you're quite right. The exact opposite to that is what we call bag holding, which it's another principle that when it appears, again, it's pretty certain that market's bullish because they've accumulated. What usually happens is you see a down move occurring. It hits usually stopping volume. It starts oscillating sideways as they're accumulating more. Then some sort of bad news is dug up, found, created, whatever. The worse news, the better. on that news, they gap it down. This time it's gapped down rather than gapped up. The spread is narrow. Volume is very high. That's what we call bag holding. And you can bet your bottom dollar that's the time to enter the market. So that's bag holding. Very, very positive sign of strength. All you're doing, you're looking at supply and demand. You're looking at the professional money that are trading thousands of contracts.
Okay, thank you, Tom. Alan is asking, why use a 7-minute chart? That was the very same question that was asked earlier by Tina. And if you want to review the recording near the beginning, you'll hear the answer. But essentially, the answer is you could use any time frame because the principles still apply, whether it's a 5-minute, 7-minute, 60-minute, or what have you. So, in a way, it's kind of arbitrary in a sense. Leslie is saying, so you see the ES as being strong, question mark. Sorry, I got in late. So, Tom, I can't remember whether he said anything about the market being strong or weak, but don't forget with the scalping on this lower time frame that the market may be strong at some point and then it becomes weak at some point, possibly. So, when Tom's talking about the market being strong or weak at a particular time, do bear in mind which time frame he's looking at and the full context. So the answer is the market strong, Tom? What's your answer?
Well, if you're scalping right at this moment, you would hesitate to be long. You might even short it on that nasty looking bar to the left on this chart, despite there's a test after it. But that test means there's not a lot of selling pressure on this market. And overall, I think this market could easily, you could easily see higher prices. But we're not right this second, I wouldn't have thought. But see, I described this many times in the past on these seminars, these different time frames. Because of the variation in the data and what it looks like and all the rest of it, right, some of the time frames some may look better than others. But how I describe it, imagine you're a doctor in a hospital, right, and you've got a patient that you've looked at, and it may have Ebola or cholera or something. Now, it doesn't matter how often you visit that patient in the near future, whether you look at it every 1 minute, every 5 minutes, every half hour, every hour. The patient's health isn't going to improve all that much. If he's sick when you first saw him, he's going to remain sick until he recovers, which is what would be a climactic action. So it doesn't really matter what time frame we visit that patient. It doesn't make any difference to your diagnosis. Does that make sense? Perhaps it does. I hope it does.
Okay, so there's a question coming from Jay about this very bar we looked at, the up bar with the higher volume closing in the middle. And the question is, isn't that an absorption bar as opposed to a weak bar? There is a prior top at that level.
Well, it can't be absorption, can it? How could it be absorption when it closed in the middle? If that was absorption volume, then the bar closes on the high and then the next bar's up. And then you might say, right, that high volume is probably absorption. But it's nothing like an absorption volume bar. It's almost like night and day. It's completely different. So don't fall into this trap, for God's sake. That, when you've seen an up move, like we have on that chart, right? It's only 7 minutes, but it's gone up. It's topped out. We saw, I think we mentioned this last week. Was it a daily chart or something or other? We were talking about it. when you see those telegraph poles stuck up on the hill like that, that is weakness. That's nothing to do with absorption volume. Absorption volume is a widespread up, closing near the high, next bar's up as it pushes through an old top to the left. Well, it certainly hasn't pushed through anything, has it? Because there's supply there. The computer's done all the work for you. It's telling you, look, ignore the signals at your peril. That's what I always say to Gavin. Because sometimes you get, well, even Gavin, I know, and people, they've said, oh, I don't need the signals too much. Of course you need the signals, because you're a human being, and you can't trust human beings all the time. They may think they're clever, but they're misled, very easily misled by all sorts of information. You may not even be aware of the information, but it's all pouring in from various places around you, and you tend to get these, what they call gut feelings. You can bet your bottom dollar your gut feelings are going to be wrong. That's how the markets work.
Hi, Tom's telling me to say hello. Hello, everyone. I'm going to pick up from Leslie says, I noticed by watching time and sales, they appear to be keeping price in a range while buying on down moves. Sorry, I meant on the daily. Today appears to be shaping up to be bag holding if the range holds. Very high volume today on the ES.
Right, we could check that out. Look at the daily chart. That's
not forgetting we've been told that the volume can be a bit dodgy sometimes daily, but anyway, that's what we've got.
well, my experience is, because VSA uses relative volume, it doesn't rely or ask for dead accurate information. You could be millions off and still work because it's relative to the previous volume. And the same with the price spreads. And that's why VSA gets away with a hell of a lot of misinformation. Now, how's that gap down? It looks a bit, if more, that could easily be a springboard rather than a bag holding. What I'd like to see, if that was bag holding with a clear gap down here, and the news is horrendous, you know, the Russians have landed, something's happened, right? Then the Martians have landed, Peter says. Right, so that's it. Now, if the volume's very high, then it would be back holding. But this, to me, it doesn't look like it's even gapped down, not on this chart. But that could easily be a springboard. In other words, a down move, kept stops, mislead as many people as possible before an up move. Because this all through here looks strong to me. Of course, that isn't strong, but we're expecting that. There is a down bar there, the volume is still high. Right, so it's not looking all terribly rosy at the moment, but to me it looks stronger than weaker. That's about all I can say to that at the moment. You can draw trend lines on that. Peter, could you draw a trend line? First two highs, first low, perhaps. Yeah, make sure it's an up bar, that blue one. That's it. And then the first support. That'll do. Yeah, that's it. Now that's a trend line, look. You can play around with these lines But what you're looking for is a line that works, appears to be working. This one appears to be working. Look, it's showing a clear down move. When the market goes below that, you are oversold. Right? Above, of course, you're overbought. Now, there's a lot of professional traders use these trend lines. As I said before, sometimes they draw these trend lines well in advance, and they've put their orders there near those lines to buy or sell. I know that goes on, definitely. So that's, to me, could easily look like a shakeout, a springboard, rather than bag holding. Does that make sense?
Okay, so Leslie says, Leslie, who asked the original question, I have e-signal data. Interesting. Yours looks different. E-signal showing 3.1 million contracts traded so far, higher than the 3rd of February volume, which was very high, and it did gap down a bit. Yesterday's close 1925, today's open 1917. You got anything to say on that, Tom? No? Okay, thanks, Leslie. The next question. Colin is saying, sorry, there's questions coming in. Colin is saying, my chart is showing a sign of strength 51 shakeout on this bar. So I'm not sure. Tom said yes, it could very well be a shakeout on that last bar. And Sebastian is saying volumes are 1 day behind on e-signal. Yeah. So we've been asked to look at symbol WEAT, wheat ETF, that had bag holding 2 weeks ago. So we don't have, yeah, I mean, if any data we'd have, it would be under the continuous contracts for wheat, and that doesn't look very useful. So we're not sure if that is accurate. Is it, Tom? Yeah? Do you want to speak?
Well, even a chart like that doesn't look very good, does it? It's obviously data missing or something's wrong. But because VSA uses relative, everything's relative to the previous 10 or 12 bars, it gets away with a lot of false data to such extent that they can't do much about it. You see, why you take commodities like wheat and corn and all those, why do they hold back the volume for the next day? There can only be one reason, and one reason only, is they don't want other people outside of their club to see the volume, because it's so important to them. Now, of course, these different, we've got the right contract even, you know.
Yes, Ramaya, I hope I pronounced that right. I said we don't have that data, that particular ETF. We don't have the data or any ETF data. So we thought we'd find wheat and look at that. Right. Raj is saying, besides the scalping focus, can you step back and look at the bigger picture, daily, perhaps weekly, on the ES or the NASDAQ? I.e., are we at a reversal point in the multi-year uptrend, or are we in a testing phase and accumulation prior to resuming uptrend into the next few months? So, okay, of what on the ES? Okay, so that's the weekly ES.
Well, leave that up for a minute. So that's a weekly chart. We do a bit of a shakeout. Well, this is a weekly chart, right? We've certainly got what looks like a shakeout. Well, it is a shakeout, isn't it? Look, here. We've got no signal on it. But there will be on other time frames. On that, they marked it up, look, right? There's no demand here on that bar, look. Now you would, if that was bullish, you would answer the lady who said, what is this absorption volume? You see, whenever you see a down move like this, a shakeout, don't forget this is a weekly chart, so it's quite a long time down there. You will have thousands of traders locked in on these old highs. Right? It's human nature. Lots of them will not enjoy that. And they say to themselves, right, I'm getting out of this. As soon as the price gets back up, I'm getting out of this. Now, when the price does eventually go back up through here, right, if the volume is high, then these locked-in traders are possibly getting out, and the professional money is prepared to absorb it. That's why the volume is so high. But here, we've got really no demand, look. So although some people may be selling, it's not shown up. Don't forget, it's professional money that will increase these volumes. That's why the variation in the height of these bars is caused by the amount of trading that the professional money is doing. So up it goes, looks. We're going up on no demand now, and it's rolling over. That's weakness. And here is a final push-up look. But look at that high volume. And it closed off the high. Markets do not like that. And it's reacting to what's in the background. Always keep in mind the background. It's not happening because the news of today. That can't possibly change the market if you think about it. But what changes the market is the reaction to the professional money. They know back here what's happened. So down it comes. So that's not, to me, that looks like weakness. But not all that weakness is you're going to get a huge bear market. They're oscillating it to trade it. Professional money, they must have movement to make money. They can't make money out of a stagnant market.
Talking of professional money, I was watching a film the other night called The Wolf of Wall Street, I think it was called, with, is it Brad Pitt or someone in it? And there's just one line in there where he's, if you like, speaking to an established broker, because Brad Pitt becomes a broker, and this established broker who seems to be successful says, look, we don't have got any idea whether the market's going to go up, down, or round in circles, but our clients don't know that. Worse, that effect. So I thought that was probably quite right. They didn't need to know, of course. They get their brokerage fees. Anyway, Rita.
Sebastian, our film expert, and Mark here. So it was Leonardo DiCaprio, but then you wouldn't notice that, would you? I would. Oh yeah, another one. Dan says, right. There are 3 people asking to look at crude oil. Better look at it then. Yeah, we have to. Yeah.
Right, keep that one up. The crude oil. Right. Well, it hit the lower trend line. Right. It's hit this, and there is a certain amount of support there. And that's what brought these sort of signals in, look. Right. Now, okay, no, we note the previous bar, look. Right, it hasn't come up with narrow because next bar down, but note how the spread is narrow. And look how fairly high the volume is. And look how it closed the middle. And look how it's on the trend line. That has to be support coming in. I mean, what else can cause it to go down on a narrow spread, something supporting the lower end of the market? What else can cause it to close in the middle? Right? And what else is it but that high volume? Look, the professional money has stepped in and they're supporting that at the moment. But it's a commodity, so they decide, right, they're going to have a shakeout of some sort. And that to me looks like a shakeout. It's not going to go to heaven at the moment, but you would certainly think or expect that to hold or even go up somewhat. But look at that trend. It's obviously trending down. I mean, we've got top reversal right at the top. Trap up move, well that's the top reversal. Right, these blue bars, that's supply, look. No demand. Now, if you're going to trade commodities, now the syndicate I was with for 15 years, they wouldn't touch commodities, so they were too dangerous for them even. So you have to tread very, very carefully with commodities. But if you see a principle, which you will do with commodities, then you can obviously, I believe you can trade options now on them. So it's a very safe bet, look. If you had an option now for a call option, you'd expect that to go up. But not up to the moon, just up.
Ben is saying, I'm curious if you can look at gold, in particular the miners, GDX and GDXJ ETFs, so we don't... Oh, did you... Hang on. Oh, no, it's okay, sorry. Yeah, we've got the gold contracts, so... Anyway, Ben is saying they look overall bearish. But 2 days ago on the FOMC news, they had a huge reversal on ultra-high volume. Do you view this as a likely upthrust to trap bulls?
Well, I don't follow gold all that much, but it's obviously in a downtrend. It whipsaws a lot. There's a lot of weakness here. Look at these up thrusts. Right, that's weakness, weakness. There'd be no demand on these blue up bars. That's an up thrust. They've had a bit of a shakeout here, look. On the back of that, they marked it up, look. And that again looks like a bit of an up thrust. That market looks more weak than it does strong to me. There's nothing there that rings bells or puts the lights on for me. I mean, look at that high volume on that. That looks weak. Professional money, we've seen that look. That bar looks weak. The trouble with gold, there's just so many amateurs in there, they can whipsaw that market around something terrible.
Question, can you still ask Tom how he will will time his entry after a powerful signal like bag holding appears on a daily chart? How would you time?
Well, I'm not that sophisticated. If I see bag holding, I'm in it. I don't mess around with anything. I don't need other criteria or wanted. If I see bag holding, I'm in. And that's really all I can say. Same at the end of a rising market, you have to see these principles and believe in them. It's no good waiting and saying, oh yeah, I wonder, I think I'll hang on and see what happens. That's what they want you to do. If you see bag holding, if I see bag holding, but make sure you are looking at bag holding. Make sure you've seen a narrow spread, a gap down bar. The narrow spread means they've gapped it down at the opening on news, so-called bad news. The narrow spread is caused because they put a floor under the lower end of the bar by buying everything that comes in. Right? The volume is high, but you've got strength in the background. That's the key. Then it's bag holding. Then you can virtually almost guarantee it's going to go up. But even then, you know, if you're a scalper, you have to follow it carefully. Does that make sense?
Adrian is asking, what time frame would you suggest for scalping on the S&P?
Well, you've got all these different time frames. This is a 7 minute, isn't it? Well, put a different time frame up. Well, say a 5 minute look. The information is there. I mean, information is there. Tell me what time frame you're looking at. Look. What's that say, Pete? Supply, right. Now, this is no demand, look. Now, why is that no demand? Why? The question is very, very obvious. If you're a professional player, you know fully well that this is weakness. You may have unloaded your own holdings there. So when the market makers mark it up to test the market, try to get some people position wrong, you're not going to participate, and your other professionals aren't, so you get no demand. That confirms that, definitely. So it's the 5 minute chart. So you can read all these things, all these bars, look. No demand, up thrust looking bars, they're all, this is a 5 minute. So any time frame will do. What time frame's that?
7.
Oh, we just looked at that.
10.
Well, okay, you've got 10 minute chart. Trying to prove my point, look. 10 minute, look, you've got a nice buy signal. Basic test. No demand, it's not tested, but it doesn't matter. Up it goes. And then lo and behold, up thrust, weakness, which we saw in the other time frames. No demand, which we saw. It's all there on the different time frames. Some frames, because of the nature of it, picks up some of the stuff better than others, but not always. But you'll get your head around it, don't worry. Keep plugging away at it. And then once you can master, you do nothing until you see a principle. Right, I mean, say you shorted that, or definitely shorted there, you'd be making a few $100s already, look. but this is scalping. You know, and these, we can't cover everything. Or perhaps you might get a put option here. There's certainly one there. The people that seem to make money with options are those traders that don't stay in there too long. Because don't forget, there's a lot of skullduggery with options. They're produced by highly professional people who know what they're doing. It's not done for your benefit. And they say, oh, it's got 6 months to run, or 3 months. Or, ooh, look, I'm making $600 already. If I hang on for 6 months, God knows how much I'll be making. And lo and behold, bang, it expires and it's worth nothing. So, again, that's a skill. You need to specialize.
Right, we'll have one more question then because we're running out of time. Alan asks, must a bag holding bar be a gap down?
Well, the actual signal bag holding, yes, it's gap down. And that's what makes it so strong, right? Look, professional players or the market makers, they know when the market's strong. Don't you kid yourself, right? And there's some horrendous news that's been dug up from somewhere or other. Ebola hit London or something, you know, God knows what it might be. On that news, they ram the market down and they gap it down for impact. They're trying to put the fear of God into anybody who happens to be long, right? Or encourage people to go short, which is even better for them. Okay, so it is gap down.
Okay, sorry, we've run out of time. Hang on. Oh, hang on.
Yeah, hi. Gavin said that he wanted me just to mention the Wyckoff VSA Smart Trader Summit, which is being held on the 1st and 2nd of November, which is coming up soon. But it's an online seminar as opposed to a live in front of you seminar, although it is live in fact. And there's a fair collection of people here to present. There's Tom, there's Gavin, there's Philip Friston, fund manager, there's let's put my glasses on, Rafael Glinicki, professional trader, there's Dr. Gary Dayton, author and Wyckoff expert, and there's Lauren Snedeker, a VSA educator. So if you want to look at what's involved there, if you go to tradeguider.com and then /smart trader, one word, you'll see the beautiful pictures of these people plus the information about pricing and registration. So more than that I can't tell you, but if you look at the why attend and benefits bit, which I just did earlier, I mean, if you want to be fully immersed in all this stuff, it's worth taking a look. So in my own experience, full immersion, as they say, you get to pick up stuff. So Rita wants to speak.
Just a few more questions. Winston was asking, what is AJ Robinson's email? I think he's support@tradeguider.com. Support@tradeguider.com. And also, Peter, can you answer these questions? Lots of people asking about the archives in the VSA Club. Tom's, do you know what's happening about it now?
No is a short answer. Someone said there are no videos for Tom. There certainly was. What's happened to them, I don't know. I'll have to have a look. Now, I've kept all the videos we've done over the period of time. So physically, I still have them here or on Tom's computer. So I'll have a look later and see what's there and what's not there. If I think I can upload them again, if it comes down to that, I can do that.
Also, there will be some missing because of crashes.
Yeah, there will be a few missing recently because of computer crashes. I know that, but certainly, I mean, there were quite a few there in the past. Maybe they've been tidied up. I don't know, but I don't know exactly without looking. But I will look.
Right, there won't be a newsletter this week because we're going to be away.
Next week.
We'll be away this weekend, so yes. But there will be a newsletter next week. So sorry about that. Anything else? Okay, well thank you very much for coming. We'll see you again, same time, same place, next Friday. Thanks a lot. Bye-bye.